Welcome back, everyone. I'm really excited to have you here today because we're diving deep into one of the most important AI infrastructure plays in the market right now, and that is Applied Digital, ticker symbol APLD. This stock has been getting a lot of attention lately, and for good reason. When you look at what's happening in the broader AI space, most people are focused on the flashy companies building AI models, but the real backbone of this entire revolution is infrastructure. And that's exactly where Applied Digital comes in. This is not just another AI company. This is a company focused on powering the future of AI through data centers and high-performance computing infrastructure. Now, what's really fascinating here is the price action we've seen over the past year. This stock has gone from around $3 per share all the way up to $42, and now it's pulled back and is sitting around the $25 range. So naturally, the big question is, what is actually driving this stock right now, and what can we expect going forward? This content is for informational and educational purposes only, and should not be considered financial, investment, or trading advice. The views and opinions expressed in this video are based on personal analysis and are not recommendations to buy, sell, or hold any securities. Stock market investing involves risk, including the potential loss of principal, and past performance does not guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. The creator of this content is not responsible for any financial losses or decisions made based on the information provided. A big part of the recent movement comes down to major data center deals and the company's positioning in the AI infrastructure space. As of today, March 20th, there's a lot happening, and I've got something special to share with you later in the video, so make sure you stick around for that. But first, let's break down what we're seeing in the market. Earlier today, during our live trading session, we were actively trading another data center-related stock, NBIS, and we actually sold our position at $122 per share right at the market open. That trade allowed us to lock in profits after a strong breakout above resistance, but we were also anticipating a potential rejection around that level. Interestingly, APLD showed a very similar pattern this morning. The stock had been consolidating sideways, trying to hold a previous support level while attempting to break higher, but it failed to do so. Instead, it faced rejection in the $26 to $27 range and sold off down to around $25.50, where it is now trying to establish support. What we're seeing right now is classic consolidation behavior. The stock is moving sideways, finding support and resistance levels, even though the company itself is showing massive growth in revenue. In fact, Applied Digital has grown its revenue nearly tenfold over the past few years. When you look deeper into the fundamentals, you'll see that they've secured major partnerships, including deals with CoreWeave and other key players in the AI infrastructure space. There's also been insider buying and selling activity, which is something investors are closely watching. On top of that, APLD has become one of the most talked about data center companies in 2026, often mentioned alongside other names in the sector like NBIS, BITF, and IREN. The reason for this is simple. These companies are all part of the same ecosystem, building and supporting the infrastructure required for large-scale AI operations. Now here's where things get really interesting. Applied Digital currently has around $16 billion worth of data center deals in its pipeline, while its market cap is sitting at roughly $8.3 billion. That alone makes it stand out from a valuation perspective. When you look at the balance sheet, the company has about $5 billion in assets, which shows strong growth and expansion. On the income statement side, they reported around $126 million in revenue in the last quarter. However, their costs were still higher, at about $146 million, which means they are not yet highly profitable. This is an important point because while revenue growth is impressive, profitability is still a work in progress. That said, the massive backlog of contracts suggests strong future cash flow potential. In the short term, the stock is experiencing volatility, partly due to broader market pressure on data center and AI-related stocks. Some investors might look at the recent price action and think the stock is weakening, but when you zoom out and consider future projections, the picture becomes more mixed, and in some cases quite bullish. Short-term projections over the next month show some uncertainty, but when you extend that timeline to 6 months or a year, analysts are pointing to potential upside. Some projections suggest targets as high as $50 or even $100, though more conservative estimates point to around a 35% increase over the next 6 to 12 months. That's still a very strong outlook, especially considering the current support level around $25. Technically speaking, the stock has pulled back to its 200-day moving average, which is often a key support level. From here, traders are looking for an initial recovery of about 5 to 10% as the stock continues to consolidate. This fits into what's known as a 3-stage reversal pattern, where the stock first trends downward, forming lower highs and lower lows, then stabilizes into a sideways range, and eventually begins to reverse upward. Right now, APLD appears to be in that middle stage where it is moving sideways and building a base. However, there is not yet a clear confirmation of a full trend reversal. What's important to understand is that this pattern is not unique to APLD. If you look across the entire data center sector, you'll see similar behavior. Stocks like IREN, BITF, and even NBIS have all been consolidating over the past month. This suggests that the movement is not just about one company, but rather a broader trend affecting the entire industry. Earlier today, we were able to capitalize on a breakout in NBIS, which is exactly the kind of opportunity traders look for during these consolidation phases. With APLD, we are now watching closely to see if it can hold support around $25 and potentially bounce toward the $30 range, which would represent a gain of roughly 13 to 15%. However, until we see a clear breakout, the stock remains in a sideways trend. Looking at the bigger picture, Applied Digital has several advantages that position it well for long-term growth. One of the most notable is its strategy of building data centers in colder regions like North Dakota. This significantly reduces cooling costs, which is a major expense in data center operations. Additionally, the company's partnerships, large contract backlog, and rapid revenue growth all point toward a strong foundation. Even though there has been some selling pressure, including shares sold by NVIDIA, the overall growth trajectory remains intact. Long-term price targets in the $30 to $45 range suggest potential upside of 30 to 75% from current levels, assuming the company continues to execute on its strategy. Now let's talk about something really exciting that I mentioned earlier. If you've been following along and using AI tools like ChatGPT, Grok, or other platforms, you might already be familiar with advanced trading analysis systems. We've just launched something special, a $10,000 trading challenge. As of today, March 20th, registrations are officially open and the challenge will kick off on March 30th. Here's how it works. Over 5 days, I will be trading a $10,000 account live, right in front of you, showing every entry, every exit, and every decision in real time. This is a unique opportunity to see exactly how professional trading strategies are executed under real market conditions. The best part is that this challenge is free to join, but there are also limited VIP spots available that provide additional benefits. These include live trading sessions at market open, lifetime access to replays, a VIP trading community, and 30 days of access to advanced AI trading tools. You'll also receive detailed worksheets and educational content designed to help you improve your trading skills. On top of that, there's an added incentive. Each day you attend the challenge, you earn entries into a raffle for a high-value trading package, which includes one-on-one coaching, extended software access, and more. There's also a unique guarantee built into this challenge. For example, if certain AI-driven stock projections do not play out as expected, participants can receive a full refund while still retaining access to key benefits. This creates what we call a double safety net, ensuring that you either gain valuable insights and potential profits or receive your investment back. It's a risk-managed way to learn and grow as a trader. Spots for the VIP experience are limited, and they are filling up quickly. So if you're interested, make sure to check the first link in the description and secure your place. Whether you're just starting out with a small account or looking to scale up to larger investments, this challenge is designed to meet you where you are and help you level up your trading game. That's the full breakdown of what's happening right now with Applied Digital and the opportunity ahead. This is a stock that sits at the heart of the AI infrastructure boom, and while there is short-term volatility, the long-term potential remains incredibly compelling. Keep an eye on that $25 support level, watch for signs of a breakout, and stay informed as the story continues to develop. If you found this video helpful, make sure to like, subscribe, and turn on notifications so you never miss an update. Thanks for watching, and I'll see you in the next one.